So Joachim, let me start with you. The recent pickup in inflation, is this a short or a long-term trend?
I think it's more short-term than long-term. It's quite typical in the late stage of the cycle for inflation to pick up. But we think that some longer-term secular forces like demographics, technology, global competition will still hold inflation relatively low.
And a follow-up to that, so are TIPS a good investment?
Well, they have been for a long time, and we've liked them for a long time. Valuations now look about fair, but we still have a slight overweight in TIPS for two reasons. One, against a full-blown trade war, which is not our base case, but it could happen. And if so, it would likely be stagflationary, so TIPS would benefit. And second of all, we may be wrong on inflation, and we may get an overshoot because we're late cycle. Was that short enough?
Okay. Andrew, turning to you, what's the shape of the US yield curve telling us about the risk of recession?
So historically, inversion of the yield curve has been a pretty reliable recession indicator in the US. We've seen flattening. We haven't seen overall inversion, some parts of the forward curve, yes, but overall we haven't seen the full inversion of the yield curve. We think that recession is a low probability. We think it's more likely that we see re-steepening of the yield curve in the US rather than further flattening. That's what we will position for and associated global positions, but it's possible that you could see ongoing flattening.
And Joachim, what is our view on oil and commodities? Positive, neutral or negative?
Well, shorter answer, fairly constructive commodities in our multi-asset portfolios. Within that, we prefer energy, where politics is a big driver, over industrial metals and the soft commodities.
Okay, Andrew, another one for you. What's our view, given our views on emerging markets, do we think that they'll be insulated in the event of a US recession?
So the short answer is no, and the slightly longer answer is that EM as an asset class is going to be impacted by global trade growth and commodity prices. So we don't expect a US recession. If it happened, that would have an impact clearly on EM. But short of that, if we have an ongoing, growing but slowing of the US economy, and with that, the Federal Reserve, does come to the end of the rate hike cycle, maybe even sooner than our baseline. That would be a positive, I think, for emerging markets, as long as it's not too much of a slowdown in the US.
Okay, now one for both of you, and you don't have to be too brief on this one, but what keeps you up at night? What are you focused on that others aren't?
Well, one thing that keeps me up at night is the jet lag, because I flew here from California a couple of days ago. But no, seriously, what keeps me up at night at the moment is the possibility of antitrust action against the tech companies by the US administration. There's been some talk around that recently. As we know, the tech sector has been the big driver for the equity rally. And because these companies make huge profits and invest them in the bond market, they have also helped to keep bond yields low. So if the US administration were to go after these tech companies through taxation or fines or breakup, then this would be bad for both equities and bonds.
Andrew?
So I'm not sure it keeps me up at night, but the thing I worry about with the medium-term view is the next recession in the US or elsewhere in the world. The initial conditions in a lot of cases in terms of monetary policy space, in terms of fiscal policy, look at the US deficit they're going to have in the next few years at a time when we see a recession as a rising likelihood. In the European case, inflation below target, populism already building in Europe at a time when, by European standards, growth has been okay. So I think something we can't time it right, but something that we can prepare for in terms of our portfolios is to think about the next recession and how our portfolios will perform if you had that kind of shock.